Hi there, and welcome. Another video in the series of wealth preservation, creation, and growth strategies with myself, Toby Street, and Jeremy Harbour.
Right.
Today, if you followed on from another video, we talked about the valuable kind of premise, if you like, of your wealth and protection of having a personal balance sheet. And this is really a follow-on from that video, but it's also standalone, so make sure you go and have a look at the other videos around as well. Now this video is all about goal setting, and if you have watched that video, you remember that we talked about understanding what you need to own in assets to provide you the income that can sustain you, that you're currently earning via your job or your business or your consultancy, whatever it is that you're currently doing. So Jeremy, what's the kind of first stage that people need to look at when they're planning this whole?
Yeah, I think the risk often is that obviously if you've done a lot of the personal development type of stuff, they tell you to set these big hairy goals. Yeah. So you could be running a business that turns over £1 million and making 100 grand a year, and you've come back from your rah-rah seminar, and you basically decide that you want to have a 20 million net worth by the end of the year. And as you struggle to get towards that, you find it very demoralizing and not really taking you forward. So I'm much more of much more into breaking it down into logical steps, and what I mean by a logical step is something that actually takes you in a positive direction, rather than just setting a meaningless big number.
So you're not limiting people by being realistic, which I know is a term that a lot of people don't really like, because we get taught to be very unrealistic in our big hairy goals, but it's kind of making it genuinely achievable.
It's good to have big hairy goals, but have a why as well.
Yeah.
So the first goal that I always encourage people to do who are doing the Harbour Club is to get to the point where all of your investments pay for your lifestyle. So all of your lifestyle costs are covered by the income that comes from your investments on a month-by-month basis. So if you literally, it's sort of child's play stuff, but if you break it back to what all your expenses are on a monthly basis, how much do you need to invest in order to cover those monthly expenses? Once you've done that, then all of your monthly income that you generate can then be invested, and you're topping up that income generation. And that's a really sensible first place to start. And basically, list it out, get to that. Think about all the different things that you could invest in that generate income. So whether it's buy-to-let property or bonds or stocks or those kind of debt instruments, things like that.
So how do you, once you're at that stage and you really understand a nice roadmap moving forward, you know what you need to own and all the rest of it, how do you recommend people then go in search of the resources, if you like, to either go and learn how to invest in that asset class on their own, or find somebody who can help them then build that asset class that can look after them in future years?
Yeah, if you want to be good with money, you have to become a student of money, basically. So, if you're going to watch the news, perhaps watch Bloomberg, If you're going to read a paper, read the Financial Times. If
so
you're
simple habits.
Yeah,
basically.
Absolutely, and just try and get, a better understanding of the world. It's interesting, people always say, oh, well, I don't invest in stocks and bonds because they go up and down, and, loads of people lose all their money, and, if I invest in a load of stocks, I'll lose loads of money. If you're investing for income, you're buying shares in some of the biggest companies in the world that generate a dividend on an annual or biannual or sometimes quarterly basis. So you're getting an income from these companies. If you've looked into them and you decide that they're companies that you want to own a stake in, if they go bad, if they halve in value, I see that as a buy signal to buy more, because if they halve in value, it means that the percentage return that you're making on your money has gone through the roof. So really, you shouldn't be looking at trading, where you're buying something one week and hoping it goes up. I don't really care if it goes up or if it goes down. I just want the income that it generates. And part of investing really is keeping it out of your bank account so you don't spend it on shit. It's getting it out. It's getting it out of your sphere of influence and into something that generates a nice recursive income.
And in terms of that kind of methodology, you're a massive. Obviously you're a deal maker, but you're also a massive advocate, as we talked about in the personal balance sheet, of creating wealth in one place and then preserving it and living off of it in another.
So one I come across quite often is you'll have somebody that's perhaps living in a house with a mortgage they can't quite afford, but with 300 or 400 grand in equity in that house. And the argument I would simply put to them is, look, that 300 or 400 grand, invested would probably pay all of your overheads, including rent on somewhere that's a bit nicer than the place that you're paying this mortgage on. So your lifestyle level would go up, your income would be all covered by your investments, and you wouldn't have all this debt. That comes back to this primary residence being a pension thing. It's sometimes, it worked really well for our parents and our parents' parents, but it's not quite as relevant now as it was back then.
And obviously,
In
as
fact,
a goal, it's much harder.
Yeah, well, the bigger a house gets, the worse the yield is.
Yeah,
I live in Singapore, and I live in Singapore 6 months of the year, and I live here in Mallorca some of the year as well, and I'm quite happy to admit that I rent my apartment in Singapore.
Yeah.
I pay about 8,000 Singapore dollars, which is about less than 4,000 pounds sterling a month in rent for an apartment that's $6 million to buy. Why on earth would you tie that money up in a property that yields that little? You're better off investing the $6 million in the construction company that builds the apartments, and with the dividend yield you get from your investment with them, pay your rent and have an awful lot of change left over. So you really have to encourage people to think. And the other thing is, sometimes the business people are running. So they're living hand to mouth and they're not having a great lifestyle.
Yep.
And yet if they exited their business now instead of waiting 2 or 3 years, that would actually give them all of the money to create the income they need to live a really nice lifestyle. Yeah. And it would give them back all the time they need to go and build another business or go and do something else to create more wealth. And I've seen people do this. They're caught in an almost Groundhog Day. Because they're living hand to mouth, they don't actually have the working capital they need to really scale their business. So they end up stuck in that circle for like 10 years. And if you think that we're really useful on this planet for about 40 or 50 of our years, because we're not very useful at the beginning and we're not very useful at the end. 10 years is a really big chunk of our useful life that people seem to pee up the wall because they don't want to sell it this year because it might be worth a bit more next year. Well, there's only so many next years you've got, frankly. So
building on that as well, you as you said earlier, you don't know what's around the corner.
Yeah, and there's black swan events. There's things that can happen.
Absolutely.
I had a call centre business that was very successful. We were doing £200,000 a quarter in net profit in EBIT, earnings before interest and tax, and we had a 3-year contract with the world's largest insurance company. The world's largest insurance company was AIG, and the whole business collapsed after AIG went through their particular pickle. So, things that you think would be really positive, like 200 grand a quarter profit, 3-year contract, world's largest insurance company, even that can evaporate overnight. And I would challenge anyone in the shoes in the same boots to make a different decision other than that's a keeper. But I could have sold it for an awful lot of money while it still had the 3-year contract with the world's largest insurance company. So it really is a question of capitalising what you've already got sometimes.
That's a really nice caption. Capitalise on what you already have in some way.
And cementing your wealth so that you no longer have to work for a living.
Park it somewhere that then pays for your life.
Yeah, because as soon as you stop working, because I actually believe the amount you work and the amount you are worth are inversely correlated. So the harder you work, the less you end up being worth, because you don't have time to make money. You don't have time to generate your wealth. So if you can park the work bit, you can get on and get wealthy.
Guys, I think that's a really valuable point there. Overall summary, we're looking to, whatever wealth you have, whatever assets you currently have, if they're yielding, then brilliant. If they're not, if they're a time suck, draw down upon them and park them in something that then helps pay for your lifestyle. And in terms of goal setting.
Yeah, and you can find even terrible businesses you can get, some money for.
Yeah.
If
you've got goodwill and things apart from anything.
if you can get £200,000 or £300,000 for it, for the barrier to entry of somebody else starting a similar kind of business, that's probably enough to give you that 30 to 40 grand a year of income you need to pay a decent mortgage and do some other things.
And then you're free to make money.
Yeah, and if exactly. And if it's not enough to pay the rent, then maybe don't live in Chelsea. Live in Bali or something like that.
Only for a year or two, and then you'll hopefully have
do lifestyle arbitrage and live somewhere cheap.
Again, is actually something that we should probably incorporate into goal setting. We talked about, how much do you need to pay your mortgage, your rent, your lifestyle now, but what's your ideal lifestyle? And actually, quite a lot of the time, people find that their ideal lifestyle costs an awful lot less than they think. Like you say, Bali, for example, very cheap cost of living and so on.
$1 a day.
Yeah, beautiful surroundings, all the rest of it. what can you add in terms of that? Because I know you're a massive advocate for lifestyle. Do you incorporate that into your goal-setting strategies?
Well, a little bit. I mean, I live, I'm expatriate, so I don't live in the UK, and I never go to the UK anymore, really. But I seem to have chosen the two most expensive places on the planet to live, in that Singapore is voted the most expensive cost of living of any city in the world. It's now overtaken Hong Kong and Zurich, which were previously the most expensive. And Port Andratch, where we're sitting right now, a property just sold which put it above the price per square foot of an apartment in Hong Kong. So we're now in some of the most expensive property in the world as well. So yeah, I haven't been very good with my lifestyle arbitrage choices. Although I do spend a lot of time in Bali, I do spend a lot of time in Asia, generally in Thailand and places like that. Yeah, that's more about enjoying lifestyle rather than necessarily reducing the cost of.
Yeah, absolutely. Okay. Well, fantastic. I think that's a nice round off to that then, guys. Please do check in if you want to get updates of these videos. Then please do enter your details on the page below. We're going to be doing these, probably releasing them roughly once every week or so. I'm going to be interviewing Jeremy on a different part of wealth. And a different part of wealth strategies, different part of business strategies, all kinds of stuff coming forward. If you find it of value, if you like this kind of format as well, then please do enter your details and you will hear more from us. Jeremy, thanks very much.
Thank you.